Hi everyone, and thank you for tuning in. In this video, I'm going to highlight two red flags for Shopify in 2022. The first one is looking at their revenue growth year over year. It's substantially decreasing the growth rate. When we look at here, second quarter financial highlights, total revenue grew 16% year over year to 1.3 billion. That represents a 3-year compound annual growth rate of 53%. So the company had been growing at a much faster rate, and that's coming to a significant slowdown now that economies have reopened and consumers are spending less money online, and we're spending more money on things like restaurants and theme parks and concerts and things we want to do outside of the home, right? We're not spending money shopping online as much. So let's look a little bit further. Let's look at the second red flag I'm going to highlight, and then we'll go deeper into each of the red flags that I'm highlighting. So this is Shopify's most recent shareholder letter or quarterly update, and this was for its second quarter. And the second risk, the second red flag I want to highlight is that Shopify purchased a e-commerce fulfillment technology company, Deliverr, with an extra R, on July 8th, 2022. And with the addition of Deliverr's world-class software, talent, data, and scale, the Shopify fulfillment network will offer merchants a one-stop shop for their logistics needs, from initial receipt of inventory to smart distribution through fast delivery and easy returns. In other words, Shopify is investing in offering fulfillment services. Up until this point, and in recent, a year and a half, I would say, it was not offering a fulfillment service. It was more of an asset light business model. It was leaving shipping and distribution to its merchants. And in that way, it didn't need to invest these large capital investments in order to offer this service to its merchants. For Deliverr, Shopify paid $2 billion to acquire this company. And not only with the cost of the acquisition, Shopify is onboarding the team at Deliverr. So that's a lot of staff that is onboarding, and that's going to increase its expenses just at the time when our shopping behavior is changing, right? And we mentioned earlier the other red flag was that Shopify is experiencing a dramatic slowdown in revenue growth as consumers are spending more money now at going to brick and mortar stores and just getting out of the house and not buying things online as much, and that hurts Shopify because Shopify is an enabler of e-commerce primarily. That's the core of its business. So let's look further here. It said, as e-commerce has reverted to a level slightly higher than pre-COVID, in an effort to recalibrate, Shopify took steps to streamline its workforce in July, reducing its headcount by approximately 10%. And so they announced some layoffs, and Shopify is not the only company that's been announcing layoffs. You could think of Meta Platforms, Netflix, um, Alphabet. Several companies have begun reducing staff as consumer behavior has shifted, and they've noticed that they need to lay some people off. But what has been common among all of those companies that I've been following that announced layoffs, it didn't stop with one round, right? It didn't stop with making one announcement. Typically, it was, we need to lay off this many people, and then they waited a couple of months and they noticed, oh no, you know what? We need to lay off even more people. And so this might just be the tip of the iceberg here, laying off 10% of its workforce. They might notice a bigger reduction is needed. And so investors are not sure of how this is going to look going forward, especially with the fact that they acquired Deliverr and the staff that they're going to need to onboard from that company. So they're giving management gave a 2022 outlook, and they said that we have grown our adjusted operating income over the past 5 years through 2021. We now expect 2022 will end up being different, more of a transition year in which e-commerce has largely reset to pre-COVID trend line and is now pressured by persistent high inflation. That's not good news, right? So they're telling management is saying, hey, look, for 5 years, we've grown our adjusted operating profit, but this year is going to be different. So don't expect us to grow our operating income this year. 2022 is going to be different. It's a transition year. It's in other words of saying like it's not going to be a good year for Shopify, but that's understandable. That's no reason for investors to panic. The business expanded rapidly during the initial phases of the pandemic. It's understandable for a little bit of mean reversion to happen right now, for the company to come revenue growth to slow down a little bit. That's fine. What concerns me more out of these two red flags is this heavy investment in the fulfillment capabilities and the fulfillment services. I'm less certain about that side of the prospects. It could end up being wasteful to spend all of this money in offering these services. Merchants may not choose to adopt this service and pay for it. And so the prospects are a little bit uncertain. I liked Shopify's asset light business model a lot more. I liked it when it was more like eBay and less like Amazon. eBay just lets sellers and buyers deal with fulfillment, right? That's the complex, expensive side of e-commerce. I wouldn't want to get into that, and as an investor, I don't want Shopify to get into that side of the business, but that's my opinion. In your opinion, you might want Shopify to get into that. But I mean, just looking at it, if we look at Amazon, which is the other big e-commerce company, the bulk of Amazon's trouble has come from the high costs of shipping and logistics and all of that. But you could also argue that that's where Amazon has the competitive advantage in its fulfillment network, in its ability to offer that, 2 day shipping and fast shipping and the convenient option. So, I could see both sides of the argument here. Although in situations where both sides of the argument have, equal weighting, I would prefer not to make such a massive investment in those areas. I would prefer these massive investments to be made in areas that are no-brainers, right? Things that you can be certain that they're going to work out. But, business is tough. It's hard to find areas that are no-brainer investments. And so Shopify is investing in this area to offer that to its merchants to level the playing field. Although it is risky and it is a red flag for Shopify in 2022. So there you have it. Those are the two red flags Shopify has going forward in 2022. The decelerating revenue growth and also these massive investments in logistics and fulfillment technology. But I will point out this is no reason to panic and sell Shopify stock. The stock has already come down significantly this year, and so the valuation is arguably already incorporating these red flags into the business. So I wouldn't say that it's time to sell because of these red flags. These are just things to take note of and monitor and follow just in case it becomes worse than what we're seeing right now, in case management comes out next quarter and says, look, I know we said the initial investment was going to be this much, but it turns out it's going to be much, much bigger than we expected. And if that becomes the case, then it's time to reevaluate the business at that point in time and consider if it's time to sell. But for now, no reason to sell Shopify stock. Just take note of these two red flags for the rest of 2022. And thank you for watching. That's all I've got for Shopify today. I'll see you next time. I post videos daily, so if that's something you want to get more of, please subscribe. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.